All right, welcome to your next session at RETCON. This panel is titled Due Diligence Check, Checking the Digital Boxes. Please join me in welcoming our panelists to the virtual stage.
Hello. Hi, I'm Field Stern. Headquartered in Chicago, I'm with a company called Redwood Capital Group, and I'm a vice president of investments and the head of capital markets. I want to start out by just thanking the folks at RETCON for putting this virtual conference on. For the folks that travel quite a bit, it's nice to be able to satisfy that itch by being able to sign up and get in and listen to some thoughts from highly respected experts in the industry. We've got an all-star lineup today. We've got a good list of questions, and I'd like to start just by introducing the folks on the panel. We've got Keith Harris, who's an executive vice president of acquisitions with Avanath Capital Management. We've got Ogal Claspell, who's a senior vice president of investments with Passco. And then we've got Jecklin, who's a co-president and general counsel of Weinstein Properties. So with that, I'll ask each of them to introduce themselves, and I'll start out with Keith.
Hello, my name's Keith Harris, and I run the acquisitions program at Avanath Capital Management, as Field just said. Avanath is an affordable housing investor. We raise institutional capital and invest across the U.S., and we currently own and manage about 10,500 units.
Great, thank you, Keith. And Ivan, if you wouldn't mind introducing yourself.
Absolutely. Hey there, everybody. I'm Jecklin. I am co-president and general counsel with Weinstein Properties. We are headquartered in Richmond, Virginia. We are a family-owned business, and we own and self-manage just under 20,000 apartments in Virginia, North Carolina, and Texas. And we are delighted to be here today on this panel.
Great. And then Ogal, last but not least.
Ogal Claspell. I work for Passco companies. I've been there about 15 years now. We are a 1031 exchange sponsor, raising primarily private capital for 1031 exchange purposes. We own about 13,000 units across the nation, primarily in the Southeast. The product that we tend to buy is newer, stabilized product. Like the other guest, I'm happy to be here today. Thank you.
Well, great. Well, thank you guys for the introductions. We got about 7 questions that we're going to go through, and in my normal course, I shifted them around to make them fun and exciting. Obviously, we're all dealing with a pandemic, and with that pandemic has obviously led to a lot of different obstacles and challenges that I think each of us are facing in our daily business, whether it's trying to buy a property, whether it's trying to sell a property, whether it's trying to fundraise. With that, I'd like to kind of pose the first question to the panel. And for no specific order, I think what I'll do is start with Ivan, and we'll go to Ogal and then follow it up with Keith. But so question 1, how has COVID impacted your ability to do proper diligence? What technologies have been the most effective in alleviating this? And what strategies have you taken to effectively do due diligence in the current environment?
Yeah, it's been interesting working through COVID. We've purchased 4 multifamily properties this year, and the first couple were kind of early in COVID days, and people were a little freaked out, not sure where things were going or how to handle things. But in some ways, in a lot of ways, it's improved our efficiency during our due diligence visits. A lot of the amenities are shut down when they would have been open, so there are no residents in there to kind of interfere with us walking around, taking pictures, looking at things. So that's kind of allowed us way more unimpeded access to the amenities and really the whole property than we normally encounter. And it's been varied. Some of the leasing teams have been a little freaked out, and that was kind of earlier. I'd say now things are pretty much back to normal. Very helpful people that we've encountered. Really the biggest challenge has been walking occupied apartments. Naturally, residents in those apartments are way more skittish than they ever were about letting a group of people come into their apartments. So we've cut back on the number of people that we have who enter apartments, and we've also cut back on the number of apartments that we actually enter. We typically try to get through about 80% of all units on the property. We've now scaled that back to about 50%. That's certainly made our lives more efficient for both ourselves and also the sellers. But it's also been challenging because we've had to mask up, wear gloves and that sort of thing, the PPE, to make sure that, you know, we're safe, residents are safe, and that people feel comfortable with us entering their homes. As far as technology, I know this is a technology focused conference, but there hasn't really been much impact, at least that we've seen, with technology on how we've done the physical inspections when we go out and do due diligence.
Great. Ogal, thoughts?
You know, I'm going to echo a lot of what Ivan just said. We've, like him, we've acquired 4 properties this year. One I would characterize as was negotiated pre-pandemic. The other 3 were done post-pandemic. In terms of how the COVID impacted us, I would say the initial month, 2-3 months, we stopped completely. You know, while everyone was trying to figure what's going on here, what can we do, what can we not do? So that was the biggest impact. Is we went a solid 3 months or thereabouts, really without any act. But since acquisition activity has again renewed, if you will, starting midsummer or thereabouts, most of the due diligence that we conduct, virtually all of it, is almost exactly what we were doing pre-pandemic, with the exceptions of, you know, wearing face masks, gloves, those kind of things.
Sure.
You know, our goal is to enter 100% of the units if we can, recognizing, just as Ivan mentioned, that there are going to be some residents that are just not comfortable with that. We're okay with that, but we still are trying to enter as many of the units as we can. I would say, frankly, from a technology standpoint, the biggest technology that we've been using that we probably didn't use as much pre-pandemic, frankly, is what we're doing right now. We are online, we use Zoom, we use video conferencing. Instead of hopping over into the conference room, you know, now we're all doing what we're doing right now. We're getting online and communicating with each other that way. And we have learned that we are just about as efficient as before using that technology. What was that, you know, Zoom and all those kind of technologies, if those were not available, this would be a little bit more challenging, but they are available. So it's worked out really well for us.
That's great. Keith?
I'll pick up where Olga left off, which is communicating video-wise through the due diligence process. We're starting there. We use GoToMeeting, and we start and end every week with meetings in the due diligence process. We've used it even to do initial video tours. If we have regional staff out in the markets that we're looking at properties, they can go out to the properties and carry around their phone and shoot some pictures for us and shoot some video. Bandwidth sometimes is a problem, especially as you get down to the basements, but it definitely works. We're communicating a ton through video, and I think it's helping everybody work together. We've acquired about 7 properties this year, 4 of which we started and finished during COVID, and they've been a variety. And a 5th one that we started pre-COVID, it's a DC high-rise in Topa, and we went literally from full-on inspections the first week of March. The city shut down the second week of March, and the third week of March we had a video Topa meeting with the residents, and then we froze because the city shut down. But we were able to execute. We've now entered a first market for ourselves in Boston, which we had never been in, and we had a small group of people that saw the asset. The rest of us have only seen it through pictures and video. We use surrogates to do some unit walks. So non-technology, a lot of help from people that we know in the markets, and using third-party assistance. With technology, we've used Zoom, we use GoToMeeting. We use a program called HappyCo to enter all the data we get from unit walks. We were doing that pre-COVID, but it's become a much more powerful tool for us now. And then we're starting to work more on another product called DealPath, which I can talk about later.
Great. So I want to stay on this question for a second and go back to Ivan. I think if I heard you correctly, pre-COVID, you were looking at maybe going into 80% of a property. Typically what we see with a lot of our buyers and what we as a buyer are doing are trying to get 100% of the units walked. You've now kind of taken that threshold down to 50%. Are you guys at all trying to then connect with the seller, and as you negotiate your purchase and sale agreement, are you trying to get additional coverage on that other 50% that you're not inspecting, so to make sure that they're rent ready and complete and habitable? Ivan, I think
we always have a clause in the purchase and sale agreement that gives us the right to inspect all units a certain number of days before closing to ensure that they're in rent-ready condition. So, we always have that covered. And then if they're not in rent-ready condition, there's a remedy in the contract for that, usually a certain dollar amount that the seller has to give us as a credit at closing. So I've always felt like I'm not concerned about that. And our approach to due diligence has really been in the unit walks. We have rarely run into issues in the unit walks that tell us that there's a larger problem on the property. Usually, if there is a larger problem on the property, structural issue, some idiocy with plumbing or something like that, we're typically finding it outside of the units and not in the units. And so the stuff that we're seeing inside the apartments is just smaller stuff. It's some of it is not typical turn stuff, but a lot of it is. Yes, but that's slightly based on our focus. We typically buy properties that are brand new, just coming out of lease up or still in lease up. So we're not buying value add stuff. If we were buying value add stuff, then yeah, I would definitely want to be in 100% of those units, so I would have a good handle on what the spend is going to be if we're going to be renovating them. But that's not been our mode recently.
Great. And then just sticking along this theme for a second. So, in my prior life, I ran dispositions for a national platform, and in coordinating the logistics of diligence, it was always really important for me to make sure that my buyers were taking their third parties and kind of entering units at once. And so, what I always found was that there were certain buyers that were great at coordinating logistics and making sure that, within that 2 or 3 day diligence period, everything was getting done efficiently. Yeah. And I'll target this more to Ogal and Keith, but in the recent transactions, would you guys say that your sellers have been a little more cooperative in getting everybody in one place, such that you guys can actually go through a diligence and do it, within 2 days and allow everybody to get there at the appropriate time and be much more effective?
Well, at Passco, we actually have an individual who kind of correlates all that, if you will. We call him an air traffic controller, because getting everyone there at the same time can be a little bit of a challenge, because you've got, for obvious reasons, you've got various schedules, et cetera, and commitments, et cetera, et cetera. Sellers have always attempted to be cooperative on that fact. Frankly, they're more interested in us all showing up on the same day than we are. Yeah. We are trying to do this as an accommodation, if you will, as a buyer. And we want everyone to be happy. We recognize that the residents that we're about to interrupt are going to be, assuming everything goes successfully, those residents are going to be our residents, if you will. Yeah. So we are very interested, excuse me, in having a positive experience of that. It can sometimes be challenging to do all that in this very fast-paced world we live in, where due diligence timeframes have shrunk quite a bit from where they were a year or two ago. So trying to correlate everyone there at the same time is a bit of a challenge, but it's definitely a goal of ours. Sellers are definitely cooperative. They're very motivated to accommodate us on that. This is what I found.
Great. Keith, anything to add on that front?
You know, just this sort of oddity that we've worked really hard to do that, not just to accommodate a quick due diligence, but the sharing of ideas. You know, your worst nightmare is your in-house construction guys go out to the property and leave, and then your third parties go out and see something, and now you got to send them back out again. But in this COVID environment, we've ended up in a very odd situation where we've had too many people on site at one time, and it's been uncomfortable. So when we go in for due diligence, we're full on masks and booties and hand sanitizers and gloves as we enter people's units. And, you know, and to your question to Ivan, you know, we've gone from walking 100% of the units, or as many as we can get into, to accepting 10 or 20%, whether it's because of us. We didn't want to go in very early in the COVID environment to where we are now, where residents may push back. So there's a little bit of juggle on trying to get everybody in at the same time to do the work effectively and not having too many people inundating a property on the same day.
Sure. So let's transition this conversation a little bit to kind of just, you know, third parties and lenders and your partners. Are you guys finding that lenders that you're working with and partners are more willing to accept new technology? And I know we've talked maybe about a limited use of technology here, but perhaps you guys can talk a little bit on, you know, what you're seeing from a lending standpoint or a partnership standpoint where, you know, pre-COVID, they would have required a certain threshold to be visited or perhaps an inspection to occur, and post-COVID or in your most recent deals, they've given up on some of those kind of obstacles or requirements. And let's start here with Ogal.
Sure. Our lenders are, particularly from a physical inspection perspective, have been very cooperative. They frankly reduced some of the things that they previously required. For example, they don't require as many physical units be walked as what they would have previously. Secondly, they are okay with doing 100% of those walks virtually. We usually have an on-site person, oftentimes it's the property manager, who will go around with their phone or, you know, tablet or whatever, and physically walk through video conferencing, physically walk the property, and then the lender's inspector will look at it that way. So our lenders have been very cooperative, something we're very appreciative of.
That's great. Keith, how about you?
Yeah, lenders have been very accommodating. I would say early on, there was a lot of willingness to look to others to help them out. I think we're all moving to a place where people are starting to get a little more comfortable in this environment. And although they may pull back on the volume of or numbers of units or amount of people they need to have on site, they're starting to want to get back to do things the way they used to, which is get people on site.
Great.
But very accommodating.
And Ivan, on your side, are you seeing kind of similar?
Yeah, I would echo that. I haven't seen much of a change from the third-party lender inspectors that come and do due diligence. And like Ogal was saying earlier, we always make a pretty concerted effort to make sure that everybody is on site at the same time, because their customers are going to be our customers in very short order. And generally, the lenders have been very accommodating with that. And we typically, our due diligence parameters generally, and Keith and Ogle probably the same way, are wider than what the lenders are looking for. Just because, you know, we're going to own the asset, the lender's lending money, so they're checking some boxes. But I feel like for us, it's more personal because nobody wants to buy that property and then, oh my gosh, you know, how did you not know that, you know, you have this major problem? How did you miss that? And so I feel like we've always been very thorough and maybe more conservative than our lenders, which is sometimes a strange position to be in. But there's another aspect to this question as well, and that's the non-physical due diligence that we all do and that our lenders do. And I think that lenders have come a long way from 10 and even 5 years ago in terms of the data that they look at. We've become way more data driven in analyzing investments than we were 25 years ago when I started doing this. I mean, it's dramatic. And the amount of information that it's out there for us to access is unreal. And you can have a much better handle on an asset when you see the broker email or you get the call from your acquaintance about a certain asset. You can rule that asset in or out much more quickly than you could before, just by looking at a few things on your computer. So I think that has really changed a lot as well. And lenders have been right there on board with that.
Well, and that's a great segue into kind of the next question that we'll go into. And it's really about just kind of, data sources. I think all of us, if I, listed out the main ones, probably we subscribe to, but the question, most buyers now have all the same data from sources like CoStar as they pursue new deals. With everyone having access to the same data, how can you use data to give your team a more competitive advantage? I think, Ivan, you kind of hit it on the head a little bit that, 15 years ago, to do a desktop review probably took a little longer than it does today with the pictures and the offering memorandum that these investment sales teams are kind of putting together. Without kind of sharing the secret sauce internally at Weinstein Properties, outside of CoStar, are there other groups that you subscribe to, and how are you using that technology to kind of help, create more efficiencies in your business?
Yeah, I don't think there is any secret sauce that anybody has. Certainly we don't, and it's not locked up in a vault in Atlanta or something like that. But I just think the publicly available information, certainly CoStar has been a leader with this. They certainly charge accordingly, but they definitely have been a leader, and it's been extremely helpful. The information that they have out there. I know, when I get excited about a property, the first thing that I do is go and look at the data on CoStar, because that can, even if I'm very familiar with the market and a sub-market, you don't have all the facts at your fingertips, and nor can you ever. And so knowing that you can go to a resource and look at what's coming online in terms of future product, knowing the demographics, having all that stuff in one place, it's phenomenal. But I'm sure, just like Ogal and Keith, you have to back check that with, your own information. You can't strictly rely on the internet to provide you with information or one source. We look at when you're talking about a multifamily property, why does a resident want to live in a certain property and not another? Well, it's, the obvious things. What are the schools like? We can go on greatschools.org and find out the ratings of the schools. So you've got that. You can go on Google Maps and look at, what retail is nearby, where are the office buildings, how are commuting patterns. All of those play into the future success of a property, and it's all right there. You have to work at it and take some time, but it's just, there's a lot of information out there, and we use that to kind of backfeed and back check the hard data we get from sources like CoStar. And then we do the old school, calling up, hey, what's your occupancy? What are your rents? Doing some mystery shops, things like that, because the data is not infallible.
Right. Keith, how about you?
Yeah, first of all, I'll agree with Ivan that there's no secret sauce here. It's just rolling up your sleeves every day. We use Yardi Matrix more than we use CoStar, but we do use CoStar, which provides us not only with the income data, but also some expense data. We're in the affordable space, so we rely a lot on government and quasi-government related sources for AMI growth and rents in marketplaces, whether they're regulated through a HAP contract or through some other Section 8 voucher program. So we're very active in that space. We rely a lot on our service providers. So whether it be the lenders or the brokers, we get a lot of good data coming in that way. So, probably go a step further back than just, the liquidity of the public information and go to relationship building. If you're the acquisition guy that has a great relationship with a brokerage platform and you're always performing, they're going to help you get to the closing table. So there's a lot of information sharing that way. And then lastly, all the software systems that we're all using, whether it's for unit walk data, it's for sharing of equipment status and age and inventory of equipment on the properties that we're buying or that we already own. We have a lot more information flow technologically to the acquisition team than we had in the olden days, as my kids used to say.
And Ogal, how about Passco?
Well, Ivan and Keith just divulged our secret sauce. It's pretty standard what all of us do. The only thing I would add is when we look to the Realty Matrix, the Co-Stars, and the other groups, which we all subscribe to, sometimes we're not looking so much for the actual number as much as it is we're looking for the story. What's going on here right now? What's been going on in the past here? What do they think is going to go on in the future? That kind of thing. And then equally important to us is the market visit, the physical getting there in the market, walking the comps, driving the market, understanding what's across the street, what's down the road. Yeah, those kinds of things are very important because we try to collaborate what we actually see and experience when we're in the market during our due diligence period and collaborate that with what the data is telling us, the data that we saw before we hopped in the car or hopped on a plane to go there. We want to make sure that they're telling the same story. And if they are not, then we try to figure out why and what does that mean. Anyhow, yeah, I think we're all doing pretty much the same thing.
Yeah, and just staying on this.
Although I will say, Field, that the one thing that's still stupid old technology, but that I love is when I do Street View to go check a property out right at the very beginning, and then I get there, I feel like I already saw it.
Yeah.
And I don't understand why it's so familiar, but you can go up and down streets, around corners, look at an aerial view, go down an alley. It's just crazy, and it's so old.
Yeah. Well, but important, right? Because, that may save you from a travel and potentially, you save 12 trips a year by just looking at a street view. All of a sudden, your corporate budget now maybe has a little more in it than it did the prior year as a result of this technology. I think for the folks that are going to be listening in, if each of you could maybe just tell us, the 2 or 3 main technologies that you subscribe to or subscription services, I think that'd be interesting for folks to hear if that's okay to share. Keith, I'll start with you.
Yeah. So I already mentioned Realty Matrix, which we use Realty as our property management system. So that provides a ton of data. We do use CoStar as well. We use, as I mentioned, various government sources around area median income and other things. We're using HappyCo, which is a system for us in acquisitions. It's for inspections, but then it's allowing us to translate the data that we record. You're retaining it during the ownership period, and it's immediately accessible by your asset management team when you take over the asset. And then we're continuing to use that data during our ownership period. So it's becoming more valuable. We're using a software system called DealPath, which we just initiated here to track our acquisitions. It allows us to maintain pipeline, but also disseminate information out to our staff as well as our vendors in the due diligence process. I'll report back when I love it, but right now I like it. So we'll see how it goes. And I know, and we've already mentioned Zoom and GoToMeeting as a great technology, which we think of for this Hollywood Squares type presentation, but really what it is for us is it allows us also to have the ability to go see some properties with our local staffs.
Ogal, how about you guys? What are you guys subscribing to?
A good chunk of what Keith just mentioned. I'll mention a couple others, more data providers, Reese or Moody's Analytics, whatever they call themselves now. We use them. RealPage, we use them for data providing as well. We also, for economic data, Moody's puts out a product. I think it used to be called, I think it's still called a Precis report that you get for a metropolitan level. It's excellent data, absolute report, economic data. So those are some samples that Keith hadn't already mentioned that we use.
Ivan, how about you guys?
Yeah, I'm kind of a broken record here to what Keith and Ogle just said. You know, Yardi Matrix, CoStar, RealPage, Axiom Metrics. I think maybe one of you guys mentioned that, and I think they just were purchased by RealPage. Apartments.com is helpful because they have a lot of photographs on their site, and that's always great to see that. And then just a lot of the free ones that are out there on the internet, like you guys were mentioning, greatschools.org, Google Maps, Street View, hugely helpful. But as Ogle was saying earlier, you getting that boots on the ground information from the brokers and from people you know in the markets is really critical and helps you filter the information, the objective data that you're getting from the online sources. So you can't discount that. It's really important.
Yeah, and again, you know, a great segue into the next question about different sources and the data points that can come from that. But, you know, different sources can give you different data on potential deals, how you discern the most accurate data. And Ivan, I think you kind of, you know, started speaking about this earlier, but, you know, at the end of the day, whether you're using a Yardi Matrix or you're using an Axiometrics, you're going to have a stale rent number. And when your team's trying to put together a rent survey, you know, at the end of the day, the best thing that you can have your folks do is pick up the phone or shop the property. And so, you know, outside of doing stuff like that, you know, Ogle, it sounded like you mentioned, you know, you're looking at drawing trends from the data. So looking at history, looking at what it says now and where we think it's going, you know, versus just saying Axiometrics is right here, Yardi Matrix is wrong here, et cetera. So, you know, just generally, you know, and I'll go to Ogle right now. What's the best way for you guys to differentiate the data or, you know, rely on one versus another, and how do you confirm it?
Well, I'm not sure there is a best way. Certainly we try to verify. Part of that verification is what we see on the ground when we're there, when we're walking around, driving around, et cetera, et cetera. That's inclusive in what we're doing. And one of the things that we like to do when we are trying to figure out the potential for new supply coming in the local area, we will go, among other people we talk to, we go to the municipalities. We want to get their perspective on it. And, you know, I know Keith deals probably more with them than we do, but one of the things I like is over the recent years, the websites of the various municipalities have really improved over the last few years, which gives us a head start, if you will, when we're trying to understand things that, such as new supply, among other things that would involve the municipalities. But there are a variety of ways to confirm or not what some of these primary data providers are telling us. Some of it is interpretive, and you know, you approach the process with your experience, and in our case, we have a lot of experience, a lot of people who've been in the industry for quite some time. So we apply the experience with what we're seeing, and try to correlate that with what the data is telling us. It's more of a, sometimes it's almost more of an art than it is an actual science of getting through it. But you run as fast as you can during the shortened due diligence period and try to check as many data points as you can, and hopefully you land in a good place.
Well, and I saw some shaking of the heads, all nodding up and down. I mean, Ivan, for you guys that are buying newer construction, newer product, I have to imagine understanding supply pipeline is very important. So to Ogle's point about the municipality websites, which for what it's worth, I completely agree with you. Are you guys spending time on those as well, trying to understand kind of what the action items are for the county and where they think, new development could be?
Yeah, we definitely take a look at that sort of data. Those sites have gotten better. They're certainly not as easy to use and not as forthcoming as sites that you pay for, like CoStar. But the data is out there, especially if you've got somebody who's curious and knows how to look for it. But I can't undersell the importance of getting in your car and driving around, because that's what renters are doing. Potential renters at a property, they're out in the market, they're driving past this place that's, one exit sooner than you, or that's on the exit to the highway closer than you are. So you've got to understand where you fit in the marketplace. And sometimes there's no substitute for just getting in the car and driving around and having people who know what they're looking for, who can help you do that. And then, even with the data you're getting from the Real Pages and the Yardies and the CoStars, they may generate a list of what their computer program says are the comps for the property. But when you get boots on the ground and you start talking to the brokers and you start understanding it yourself, you may come up with an entirely different list that impacts how you feel that property is going to perform. This happens to us every single time. And it's for us, it's the most time consuming part of the process, because it's manual. You have to make those calls, you have to shop those properties, and you have to know which properties they are. So that's kind of the hardest part of the process, but it's really, really important. Even in this day and age of all the technology in the world, you still got to do that.
Sure. And Keith, with you guys, really taking some of that government data and splicing and dicing it and analyzing it, that data is really going to be important for you guys to make smart investment decisions. How are you guys making sure that you're navigating through it properly, and that, the data that you can rely on is appropriate?
It's really the trends that the other guys have touched on. I would agree with Ivan on getting on the ground and understanding your market. I do believe that, one man's D is another man's B, so quality assets. So you need to be careful about how everybody's ranking things and where they're placing it. I noticed it more historically than now, although I still see it with the varying competitive data sources that they'll have completely different numbers for history and for the projections in the future. But if you use the same data source, you usually end up in the same spot at the very end. So a year-over-year trend is pretty important to how we're looking at things. In terms of resourcing information, a lot of what we're looking for is public. I mean, there is no secret sauce to be a broken record here. So you're really just trying to get as much information as is possible and look at where that information is being originally sourced from, frankly. And if you can get comfortable with its base source, then you can start to get more comfortable with how to use it.
Great. And we'll go to the next question, which is, do you see new tech strategies remaining in a world post-COVID? And before, we start responding to that, just a couple takeaways so far. I think back to my college days and my first real estate class, where, the first thing you learn is location, location, location. And I can't help but think about that when, Ivan, you talk about, at the end of the day, your gut, getting in your car, driving around is always going to be the best way to just confirm, a micro market understanding of kind of what you're looking to potentially do. And so while, all of us, I think, subscribe to some great technologies, and I think more than ever now we're relying on FaceTime to be able to do virtual visits and Zoom to have, in-conference meetings, what are each of your guys' thoughts on just certain technologies, replacing that of, a potential acquisition guy or a potential deal guy's way of looking about a new deal? Because Keith, as you mentioned, Deal Path, there's ways that can, they help filter new deals that come to your line. And if you can set a certain list of parameters, ideally the best things will come out and whatnot. And I think at the end of the day, there's some great technologies, but to some of the points that have been discussed so far, your gut, location, being able to actually see the real estate and being there physically there, that's irreplaceable. And so I'd be interested
Yeah,
to,
I don't.
From you guys, what your thoughts are.
I don't think the technology is going to replace that. And at the end of the day, the hard asset that we're investing in, and whether or not it's going to be a good matchup with all of our respective strategies, isn't going to change. What technology will do and what will stick is my confidence in having a team that's maybe not all located in the same spot. My ability to feel comfortable with that communication style that was a little uncomfortable at the beginning of this environment. The sharing of data, even with my investment committee, a lot easier for us to have a decent investment committee meeting when everybody's not in the same room. It's a lot easier for us to disseminate information that we've now gathered from multiple sources and redacted into a single presentation and send it off in a technological fashion that maybe we couldn't do before. I think it will cut back on some travel. I think my natural state, having been in the business as long as I have, because of what Ivan and Olga said in terms of wanting to get out to the marketplace, my natural state is going to be to get on an airplane and go somewhere and meet somebody and see something when I don't have anything else that I have to do burning at this moment. That may change. I may now, say, hey guys, how about a cocktail on Friday night on Zoom, just to hear what the hell's going on with your life. We just did a 350 person 2-day ULI multifamily councils all together on Zoom, and then did breakout rooms where we sent people into little rooms to chat with each other and then bring them back into a big room. I mean, what the hell? Who came up with that idea? That's super cool. That's about as close to traveling like Captain Kirk as I'm probably going to get.
Very good. Ogal, how about yourself?
Well, I'll certainly echo what Keith just said. We, coincidentally, we just had a company staff meeting this morning, virtually, and we've got offices all over the country. We may not be a huge company in terms of number of employees, but it was kind of fun to see, kind of that Hollywood Square, Brady Bunch, whatever you want to call it, up on the screen. You can see everyone's smiling faces. And, it's funny because then you start to study where are they sitting? I don't know. It's just kind of crazy, that kind of thing. But certainly the use of technology is, as it continues to improve, I would say from the acquisition process standpoint, where a lot of this technology is very helpful is right at the beginning of the process, before you actually go into content. As you look at data, you can filter much more quickly now stuff you just want to toss, for lack of a better way of putting it, stuff you do not want to spend time, energy, capital pursuing. That's where the data that's available online and other places has been very helpful. We're far more efficient now than we probably were 5 years ago of what to pursue. And certainly there's other technologies that are improving that will help due diligence stuff, like the use of drones. We can send a drone up, look at a roof, or maybe look at something up high that we normally wouldn't be able to get a close look at. So those kinds of technologies, as they improve, we'll take advantage of them. But at the end of the day, location, it's absolutely correct. And boots on the ground to verify what we're learning. I believe that's still going to stay with us for a long time.
Yeah.
Well, Ogle, it's pretty funny you say that about the drones, because we've had a drone for a number of years now, and it's made we've shifted a lot of our roofing work to more honest roofers. And it's when a roofer says, "Oh, can't you tell that roof is needs to be replaced?" Or you're looking at an acquisition for something you don't own yet, and you're wondering, now for sure. And so that one little it started as a toy, but it's a really valuable tool right now. Totally agree on that.
And Ivan, before I let you get a chance to comment, I'll tell you, we've acquired 2 deals in the last couple of months, and in both instances, some of the third parties that we use have offered us to use their drone technology, where they can literally inspect, virtually the entire exterior of a property, but then also fly into the units and actually take pictures and inspect the units, such that if you really do have residents that don't want you to come in and you have a team that's too afraid to go into the unit, you can still accomplish that unit inspection. So, if you think about, the Navy SEALs that are flying the drones and whatnot, now you've got, the junior gamers that are doing that, but flying in and out of units. And
Well, as long as I'm not the one controlling the drone, we'll be okay.
Exactly. But Ivan, any kind of final thoughts from you as it relates to technologies that stick?
No, I think it's here to stay. It's not the be all end all. During this crazy time we've had in 2020, where we've all been remote, technology has been fantastic in being able to bring us back together, like both Ogal and Keith were saying, having meetings with people. I mean, you're out of your office now, you're spread across the country. So how do you make that connection with people? Because human beings are a social animal, and we strive to make connections all day long. That's what we want to do. And you have no way to do that now, but technology, it's not a perfect substitute, but it allows you to continue to have that connection. So that's here to stay. It's going to certainly help with travel budgets. It's not going to solve everything. But I would say the one real big benefit for us has been, it's given us confidence to get into new markets that we weren't previously in. So for example, this year we got into the Nashville market. We never owned anything in Nashville, but through the use of technology, and we were able to learn a lot more about that market even before we set foot on the ground. And it really gave us the confidence to pull that off. Whereas I think we would have been way more hesitant beforehand. It would have required more visits, more talking, stuff like that. So.
Well, I think we're getting close to our time limit here, but I personally just want to thank each of you for spending the time chatting with me today. I thought it was an excellent dialogue, a lot of great insights, and I'll make sure that I took very copious notes on the secret sauce, so I can at least fine tune our strategies internally. But no, seriously, thank you guys. And if we were in person, I would shake your hands. Obviously, I can't do that, so. Appreciate all your guys' time. And again, the folks at RETCON, I appreciate you guys putting this all together and hope our viewers enjoy it. So thank you very much.
Awesome. Thank you. And a big virtual round of applause to all of our panelists. That was an awesome session with a lot of great insights. I know I was taking notes too. All right, if you're looking for your next session here at RETCON, you can take a look at your agenda or take some time to connect with your peers with one-on-one networking sessions. Thanks so much, and we'll see you around.